morning and welcome to Saxo Bank Market Call. Today is Friday, the 26th of October. We'll start out with yesterday's overnight news bullets. In the beginning of the trading session, we had some Swedish data out. We had the Swedish trade balance out way stronger than expected at 8.2 billion versus 7.5 expected. And also the producer prices came out above expectations, showing a monthly increase of 0.6% versus 0.4% expected. Way better than prior figures in August, which came out negative at minus 0.4%. From the Eurozone, we had the German IFO indices. We saw the business climate out higher than expected, as well as the current assessment and the expectations also coming out higher than expected. So strong expectations for the future outlook in Germany. From the UK, we had the BBA loans for house purchasing from September figures showing a drop from August to 52,685 versus 61,051 prior figures. From the Czech, we had a rate announcement. The Czech central bank left the repo rate unchanged as expected at 3.25%. However, we saw a strong move in the Czech after the figures, and Euro Czech is definitely going lower. Of course, the key figure was from the US, where we saw the US durable goods orders out disappointing. The headline figure coming out at minus 1.7 versus 1.5 expected. And the core durables, that is ex-transportation, came out at 0.3% versus 0.7% expected. Later we had the new home sales. The market was really looking forward to this after Wednesday's massive disappointment in the existing home sales. But the new home sales came out way stronger than expected at 4.8% versus a drop of 3.1% expected. However, the dollar continued to sell off, and we still regard the dollar as weak. Euro dollar went to new highs this morning at 143.64. And of course, the key thing to look out for with regards to dollar, we have a fairly light day-to-day with regards to data, is Wednesday's release of the US GDP. And of course, the FOMC rate decision, where the market is mixed between an unchanged rate or a cut of as much as 50 basis points. Overnight, we saw the Japanese CPI figures coming out more or less in line with expectations. They are still running negative year on year, and we still regard the yen as weak and don't see the Bank of Japan hiking rates at least this year. Also, the industrial production helped this view. We saw the monthly figure coming out at minus 1.4% versus a drop of minus 1.2% expected, and also the yearly figure was lower than expected. So, going into market developments in FX, we saw overnight range-bound Asian markets, despite the yen CPI figures, with the dollar continuing to go weaker across the board. In fixed income, we've seen both treasuries and bonds remaining with a bullish bias ahead of Wednesday's Fed decision. In stocks, well, the US stocks closed a little changed with a bearish bias, with large shadows over the last 3 days. Markets await direction. However, in the Asian session, the outlook was good, and we saw green figures across the board on back of strong earnings, which I will return to. In commodities, we saw the crude oil again breaking $90 a barrel, and gold and silver rallying on the weaker dollar. So what's going on? Well, crude prices in new record highs, with the December West Texas contract trading or hitting at least $91.4 a barrel. Unexpected drop in U.S. stockpiles have added to ongoing concern that supply from the Middle East may be disrupted. And this is why we see the oil going higher also on these geopolitical risks between Turkey and Iraq. Gold rose to 28-year highs as continued dollar weakness and record high oil prices spurred demand for gold as an alternative investment. Spot gold has hit a high of $776.91 in Friday's trading session overnight here. In Asian equities, well, they were broadly higher, as I mentioned earlier, with Hang Seng breaching 30,000 to reach another all-time high. Both strong earnings from the likes of Sony Corporation and increasing expectations of further U.S. interest rates cuts help Asian equities higher. Going into today's calendar, well, at 7:15 GMT, we have the Swiss producer and import prices out. They're expected to come out increase 0.3% month on month and 2.9% the yearly figure. At 8 o'clock we have the Eurozone M3 figure, which is expected to come out at 11.4% year on year. That is the September figure, but we don't expect the market to move very much on this. From Canada at 12:30 we have the business conditions orders, not likely to move the market as well. We still see the CAD as a strong currency and expect dollar CAD to test maybe all-time lows once again this morning. At 14 o'clock we have from the University of Michigan the monthly consumer confidence. This is the October figure, expected at 82. Going forward into Monday's trading session, we have the Kiwi trade balance, which will be very important. We could see a disappointment here and expect a sell-off in the Kiwi, but remember it's one of these carry trades where you get a high rate going long into this currency. So we've been wrong before with assessing the fundamentals instead of the market behavior. From Japan we have the large retailer sales and the retail trade, and on Monday we have from Germany we have a string of CPIs and the IFO business climate survey by industry, and from UK we have the M4 money supply and mortgage approvals. Yeah, of course the key thing next week will be Wednesday's FOMC rate decision, and remember that also on Friday we have the release of the US job report, which of course will include the non-farm payrolls figure. Heading into today's trading strategies, in FX we have a signal to go short dollar CAD. This has already been filled. We went short at 0.9740 offer with a stop bid. Sorry, we went short at 0.9640 offer with a stop bid at 0.9656. We are targeting new all-time lows at 0.9575. We still see the dollar as weak and expect the CAD to go higher, as well as the carry trades, especially Aussie and Kiwi today. We still expect the yen to go stronger and see dollar yen to go lower, especially if it breaks around 113.80. In equities, well spurred by the strong Asian session, we recommend buying DAX on dips towards 7,800. Even with the subprime worries still being a major theme in the markets, the broader markets remain with a bullish bias on earnings on average exceeding estimates. Notably, Sony, Acer and Microsoft have come out better than expected, and Microsoft raising their profit forecast. So we recommend getting in around 7,800 with a stop at 77.70, and we're targeting 80.60. That's it for now, and thank you for joining in. Have a nice weekend.